Good morning, everyone. You are watching live Daily Market Outlook for Tuesday, 13th of March, 2012. The highlight of the day so far during the Asian session was the Bank of Japan's meeting that resulted in widely expected interest rates staying on hold and keeping the monetary policy on hold and overruling a loan proposal for more stimulus, as well as disappointing some in markets who thought the central bank could follow up last month easing with another move to amplify its impact. The central bank instead expanded the loan scheme targeting growth industries by 2 trillion yen, approximately $24 billion to 5.5 trillion yen. Under the plan, it created several new loans arrangements, including the one that will tap its dollar reserves for investment and loans denominated in the foreign currencies. As expected, the Bank of Japan kept its policy unchanged at a range of 0 to 0.1% and refrained from boosting asset purchases after it boosted them by 10 trillion yen last month. But the yen ticked up after the decision, while government bond futures and Tokyo share prices trimmed gains in a sign that some market players counted on another surprise. So far, the dollar yen holds the positive tone despite some expectations and initial fall of the pair after the announcement of the rate decision. However, the dollar is again the positive footpath against the Japanese yen, and it's approaching its recent high at 82.63. Most likely likely scenario would be extension of the broader uptrend of dollar yen as it keeps the positive tone of 76.00 base. The euro is ticked higher during the late hours of New York yesterday and the overnight session, but gains so far being capped just under 132. That keeps the downside still vulnerable at the latest rally of 130.77, yesterday's low. Sterling remains under pressure currently in corrective mode of yesterday's low at 156.00, while the dollar Swiss is attempting to find base at overnight's low at around 91.40 zone as it reversed of recent high posted yesterday at 92.17, attempting to maintain the current positive structure of 89.30 double bottom. Gold remains under pressure, still holding below $1,700 our initial barrier, while the crude oil is in the positive. The crude oil is in the positive path of yesterday's low at 105.37, regaining again $107 per barrel price. The US dollar, as said, hovered just below its 7-week high against a basket of currencies during the Asian session, bolstered by expectations that a string of encouraging economic news should persuade the U.S. Federal Reserve not to apply fresh stimulus, at least for now. Today's FOMC meeting is widely expected, with the focus with investors awaiting an announcement that is due at 18:15 GMT, and the dollar is so far seen supported by signs of improvement in the world's biggest economy. The data last Friday showed February was the third straight month in which there was a gain of more than 200 jobs. And the dollar strength has also most striking against the yen, which fell sharply after the Bank of Japan last month unexpectedly boosted its asset purchases by 10 trillion yen and set an inflation goal. Today's calendar also is full, apart from those economic indicators already released. As mentioned, the Bank of Japan, we already commented the tertiary industry activity from Japan came in at disappointing minus 1.7% compared to plus 1.8% of the previous month, and today's forecast at 0.4%. Australian monthly home loans also came more negative than the forecast of minus 0.5. Today's reading at minus 1.2% compared to 2.1% of the previous month release. French monthly CPI came at expected level at 0.4% compared to minus 0.4% of the previous month. Still to come, Eurozone finance ministers meeting is due today, and from UK trade balance due at 9:30 GMT. Further widening of the gap to minus 7.8 billion sterling is forecasted for today, compared to the gap of minus 7.1 billion of the previous month. At 10 o'clock GMT, German zoo economic sentiment, very optimistic forecast for today. 10.6 is the consensus compared to 5.4 of the previous month release. That shows that German economy is on the strong path towards recovery and further strengthening. Eurozone zoo economic sentiment at the same time also it's promising forecast at 3.8 is today's expectation compared to minus 8.1 of the previous month. CB reading index monthly from UK is due at the same time, 10 o'clock GMT. No forecast, previous month release minus 0.5%. The ECB President Mario Draghi is due to have a speech at 11:30 GMT, and then America kicks with the core retail sales at 12:30 GMT. 0.8% is the forecast for today compared to 0.7% of the previous month release. These are the core retail sales, and the monthly retail sales are expected much better than the previous month release of 0.4%. Today's forecast is 1.1%. US business inventories due at 1400 GMT. 0.5% is today's consensus versus 0.4% of the previous one. And the key event of the day is FOMC federal funds rate due at 18:15 GMT. No change, of course, expected in the ultra low rates at 0 to 0.25%. More interesting will be the comment of the Fed chiefs after the announcement as the statement follows up, and when we will have more clear picture of further steps of the Federal Reserves in light of current strong signals of recovery of the U.S. economy. Also bear in your mind that time has changed in U.S. They already started the daylight time saving, which means that America turned to the summer time, while Europe is going to do the same in 2 weeks, approximately less than 2 weeks. However, there is a difference of 1 hour, and this also applies on the release of the economic indicators on the daily basis until the, I think, 25th of March, when Europe will change its time towards to the summertime. Now, quick look at the markets and this to see the latest movements of the majors and the commodities. Starting with euro, that is in the near-term recovery mode of yesterday's low at 130.77, when the initially gains were stuck at 130.130 and stayed for the good part of the day. When the pair broke higher, 131.90 was seen so far, just ahead of 132. Our next barrier, psychological, the round figure resistance, and the 55 days exponential moving average that keeps the upside still intact. The immediate pullback so far found support at 131.40, but current weakness sees a break below 130.150, where are the both moving averages of 20 and 55 days currently standing. Sees potential of further weakening as the hourly studies are still holding above their midlines, but started pointing lower. That might risk further extension lower. Yesterday's intraday highs at 131.30.20 are the next support level, and below this, and the loss of 131 is definitely to turn the outlook for the short term negative and possibly refocus 130.77 yesterday's low. On the larger picture, 4-hour chart shows the pair still in the unobstructed downtrend of 134.85 double top posted at 24th of February and the 24th and 29th of February. Currently attempting lower, still no signals of break, as we need to see the break of minimum above 132.00, where is also the channel resistance, and the previous lower top at 132.90 in order to signal stronger recovery. Until then, the outlook remains turned more to the downside, as showed on the daily chart, as the studies are currently breaking below their midlines, suggesting further weakness ahead. Immediate support is at 130.81, yesterday's low at 130.77 and 130.81, which is 55 days simple moving average on the daily chart, loss of which would risk completion of the head and shoulders like pattern on this this point, and the break that's also the neckline approximately at this zone that might signal further weakness of the pair, as the price action already broke below the bull trend line drawn of 126.25 low of 126.22 low of beginning of January, where this corrective phase started, and it was stopped at 134.85 so far, where the pair posted the double top. So the daily studies are not very promising at this point, with loss of our key support at 130.80 zone to expected to trigger further weakness, while only break above 132.90 would improve the current outlook for the euro dollar. British pound against dollar remains in the negative mode of 159.91, recent high posted on 29th of February 2012. Since then, the pair is in the descending mode, losing some critical supports. The latest one was at 156.50, higher platform that held downside intact for from the beginning of February. However, currently the pair lost the support, and so far dipped to 156.00. That was initially our initial target on the downside. Currently, the pair is in the consolidating mode, but still holding below 157. Our next target, 156.80 is the 55 days moving average, and 157 the static resistance, break of which only would avert immediate downside risk and allow for some stronger recovery. On the 4-hour chart, studies are quite negative, but close to their extremes. That might signal some corrective action ahead, but overall the picture remains firmly negative. At this point, only break above 158.30 zone that capped the upside during the last week, Thursday and Friday, might improve. On the downside, the targets below 156 Li, we have the next Fibonacci support at 155.23 that marks 61.8 Fibonacci retracement, and then comes 155.00, the round figure support. The daily studies are losing traction now, as MACD and the momentum holding below their midlines, suggesting further extension higher, as well as price action holding below 55 and the 90 days moving average is currently at 156.60, where overnight corrective action was capped so far, and this is our initial support on the upside. As said, the minimum break of 158.30 is required to improve the wider picture, basically to keep the to bring the pair back into the 1 month range. Otherwise, it might risk further extension lower, with the levels at 155.23 and 155.00 to come next in focus. Dollar yen ended its signals an end of its near-term corrective consolidative mode of recent high, fresh 10-month high at 82.63, posted last Friday, as the downside remained contained by 8200, our initial support, previous high, and now reverted to support with the 55 days exponential moving average on the hourly chart holding the downside for now. There was a spike lower at 81.95 seen early this morning, but the pair quickly regained the ground and currently heading towards 82.63. On the upside, break above 82.63 has immediate target at 82.97 that marks 38.2 Fibonacci retracement of the larger down move of 2010 high at 94.97 down to record low of dollar yen at 75.56. Back to the lower time frames, initial support at 81.95, 82.00 is our first support ahead of 81.45 and 81. We have some Fibonacci levels at this point. 81.84 is the 38.2, and then 81.45 static support, and 81.36 61.8 Fibonacci retracement of the latest ascent from 80.55 higher platform up to 82.63 high, and the loss of 81.36 would risk further weakness and possible test of a key short-term support at 80.55. Back to the daily studies, still in positive tone, yet no signal of reversal, but quite extended. All the studies close to their and basically above their extreme points might suggest some stronger corrective action ahead before the bulls reassert for extension of the sharp uptrend from 76.00 base. That might signal even stronger recovery and a possible test of next very strong barrier at 85.50, which is the high of 2011, and also 50% retracement of the 94.97 to 75.56 descent. Dollar Swiss is attempting to base at 91.38, the low of today overnight, low posted in the early hours of today after initial gains were capped at 92.17 yesterday, and subsequent pullback retraced approximately 50% of the initial move up of 90.70 low of last Thursday to 92.17 yesterday's high. The structure on the hourly chart is still in the negative. The studies are still in the negative field, but started pointing higher. That might signal some stronger recovery, especially that current price action broke above 55 and 20 days exponential moving averages. That might signal further extension. We need to see a gain of minimum 92.00 in order to refocus upside and break above 92.17 recent high to open more significant resistances at 92.50 previous range ceiling, also 92.42 and 92.45, where the crossing, the touching each other, the 55 and 90 days moving average on the on the daily chart, ahead of the key barrier at 93.00 high of 16th of February 2012, a break of which is required to refocus upper levels and possible attack of 95.73 recent high in the short term. As the pair holds above the broken channel resistance, and which now offers the good support at 90.70, holding above this level keeps the upside in focus, especially that daily studies are now improving and attempting above their midlines. That might suggest further recovery is seen ahead. A quick look at gold. It remains at the back foot after yesterday's quick action lower when the price dipped down to 16.77, and the sharp recovery and break higher that peaked at 17.16, still short of our next very strong barrier at 17.25. Recovery high and the 50% retracement of the broader down move from 17.90 down to 16.63. The hourly studies remain negative and keep the downside favored with initial barrier at 17.00, 17.05 previous lows that keep the upside so far intact. Loss of the next support at 16.92 to possibly open way towards yesterday's spike low at 16.77 and likely to test 16.63 as the hourly studies are in the negative territory. The structure on the 4-hour is rather neutral at this point as the gold's price action in the recent hours moves within the narrow range. We need to see break above again 17.0005 the static resistance and the 17.08 55 days exponential moving average in order to refocus the next barrier at 17.16 and the key barrier at 17.25. There is also formation of the triangle at this point with the trend lines offering initial barriers at 17.13 and the support at 16.85 break of either side to define the near-term price action. Daily structure on gold is losing steam as the studies broke below their midlines and looking for test of 16.79 200 days moving average, as long as 17.16 and 17.25 barriers where is also 20 days moving average on the daily chart stay intact. More focus is seen at this point towards the downside as weakening daily studies see potential for a further extension lower and the loss of 200 days moving average to focus immediately focus 16.63 previous low. Also quick look at the crude NYMEX crude oil. It remains within the larger picture, shows the price action still entrenched within the range of 104 and 110 as the price action is rather directionless at this point. However, the narrower time frames, especially the hourly, are attempting now to turn positive as breaking above their midlines and break above 55 and 20 days exponential moving average, as well as 20 days breaking above 55, keeping the upside now in focus. We need to see break of minimum 108, 108.20 previous high of last Friday in order to sustain the recent recovery of 104.34 low of 7th of March and the higher low of yesterday at 105.37. On the 4-hour chart, it's still positive structure, but as well a barrier above 108 needs to be regained in order to continue recovery. On the downside, the loss of 105.37 to risk 104.34 and possible further weakening, as this is also the recent range floor that might signal upside intact, loss of which would signal upside intact for now and the open way for a stronger reversal after the pair hit its a fresh high at 110.53 on the 1st of March 2012. I wish you a nice day and successful trading.